Hey guys, Mike here. So we got a nice holiday week coming up. Also, we got one big earnings coming up as well. So it's definitely gonna make for an interesting week. We're talking about NVDA on Tuesday, and we'll get into all the economic data and earnings that are gonna be coming out and stuff. But more importantly, I told you guys I talked about finding some data and stuff about how Thanksgiving week normally performs. One of you guys with nice stuff to send me. Some information and stuff. So I'm gonna show you that and show you how it historically performs. Also. We'll get a interview from Jim Cameron, about the flows and everything like that and what he's seeing coming. And some of the dates are very interesting, so you'll want to see that. And I cut it down very short from a long interview for you. And then we'll look at some charts because some very big things are going to be happening this week on some of the longer term time frame charts. And so you'll want to see that as well. Now, how do we perform in Thanksgiving week? How does it normally look? And when we look at Trader's Almanac, which one of you guys sent me and stuff, normally before 1987, it was a guaranteed 34 out of 35 times it was green, right? Which is just amazing. That changed after 1987. You can see you had 8 declines, 22 advances, but more importantly, you can see historically with this data right here, and it breaks it down very precise, right? Like Monday, Tuesday, Wednesday, Thursday were closed, of course, Friday, Wednesday and Friday. And then, of course, more important to me is the Friday to year-end close, okay? But I just want to fast forward down. This goes to 2016 from like the 21st century, like so 2000 on. And you can see on Monday, it's 50-50, right? It's basically a crapshoot. Tuesday, a little bit more green going on, or I should say black, because there's no such thing as green and red on this, I guess. But, more positive. And then Wednesday, though, Wednesday is usually really positive. You can see it right there. That's the third column, as you can see it right there. And then, of course, Friday, if we come over 3 more columns, you can see it's kind of like, really hit or miss, to be honest with you, when you look at that. But then when you look to the far right, I mean, you can really see that from Friday to year end, if we're getting a rally, if we just count that up here from 2016 back, I mean, that's 1, 2, 3, so it's 17 years to look at, and I see 5 red out of 16. And I went and looked at like 2017 to 2022, and you can kind of see the same thing where, for the most part, you did end up having a green one, especially if the momentum was rolling in, that usually you were going to get that Christmas rally and stuff. And there will be, weakness, right? Like Monday and Tuesday, if you can get weakness, probably me those 2 days. Right at the beginning of December, you might also see some weakness as well before you start doing your Christmas rally and stuff like that. And so, I looked at this interview from Jim Cameron. He kind of explains, like, what he's seeing in the flows. That's his expertise is volatility, right? And so I never even claimed to try to understand what this guy knows about volatility. But, this is what he's got to say, and he put specific dates in there, what he's expecting.
That's the power of flows. I think if you're not watching this at this point, you're completely playing the wrong game. The reality of the situation is the market was down 12%, from the peak, about up 7% for the year. If it broke down another 5%, we were going to have problems, but time was not a bear's friend. That's what we said. And if that momentum didn't get going, we knew that these flows were coming. Those flows are what? Let's just review them real quick. End of the year, collateral reinvestment, January 1st. This is trillions of dollars of reinvestment in the context of $50 billion that moves markets. You have volume-weighted time dramatically lower. So the Vaughn and Charm flows are significant during this period. And in the context of significant open interest in the December quarterly, January options expirations with significant skew. All of that leads to a significant amount of buyback. And you put those all together in an environment where vol is compressed from structured products, that dealers are long vol. It was pretty clear that we weren't going to get that other 5-6% in a matter of days. And that's why we were able to point that to that calendar, say after this little bit of self-flow into the end of the month, the positive flows are going. Important to note, the holidays, Thanksgiving and Christmas, fall in these windows of weaknesses, right? The periods exactly after options expiration. I don't talk about that much, but that's also an added element of seasonality. If you're in this window where that window of weakness exists, but you're removing half those days, you're accelerating the most dangerous times, right? And you're moving into the more constructive times.
I see.
And that's very much the case here in this window. So at this point, good luck fighting these flows. That doesn't mean we can't get a pullback. right? We can. We're going into a window of weakness here. You can get a pullback. You can get digestion. It makes sense. But the odds aren't in your favor, right? And if you're waiting for this window of weakness to be this massive pullback to get you back in the market, good luck. I'll see you January 17th. That's when you'll get your pullback.
And before we continue, guys, please hit that thumbs up down at the bottom. Helps people find the videos. Really appreciate that. And if you like the content, think about subscribing. And I think you've kind of seen this, right? I've showed the volume, how it's just been crazy with this thrust up because, you know, you keep reading articles about how hedge fund managers, you know, they're just diving in because if they don't, they're going to lose their freaking jobs. You know, that's just the way it is. They missed this rally. And so, you know, we'll see how it continues forward and stuff. I mean, do I expect the kind of the rally we've gotten since October 27th? Would you expect that kind of move? It's like I wouldn't expect that at all because you're starting to come up with some really high levels of resistance, of course. So I wouldn't be expecting 3% moves every day or something like that. But, you know, we'll see how it goes. Now, I did want to, before I get in the chart, say I forgot to put this in yesterday's video. One of you guys reminded me. This is one of the most popular questions all you guys always want to know. But if you're in TradView and you're looking for that volume profile, which you're going to see in just a minute, you know, just type in VRBP. It's visible range volume profile. That's how it's going to come up right there. I'm actually going to go back because mine's already here. And then, you know, you pull it up. That's what mine looks like. But you just got to go into the settings and adjust this right there, how you want to do it, how you feel good about it and all that, and how you want the bars to look and everything else. So just adjust your inputs and style, and you'll be good to go. So hopefully that helps out right there. Sorry I forgot to put that in yesterday's video. Now, one thing you're going to start to see a lot of this week is these bullish MACD crosses that look like they're going to happen on the weekly charts. Now you're talking about the longer term time frames, right? And so that is a powerful thing when it happens normally. But again, we're coming up into, you know, some pretty heavy resistance levels after a huge move like this. But you just got to figure out, again, you know, who's still coming in the market. This is an uptrend, obviously, still in an uptrend. You kind of got like, maybe this is the channel. This is starting to form and stuff. And so I'm not one of these people here saying, oh, we're going to hit all-time highs, even though it's crazy. We're only like 5% away or something. But, you know, can it continue to move up? Absolutely. Absolutely can. And you saw some of them dips getting bought up this week. And then you look at NDX, the NASDAQ, same thing. You're going to get a bullish MACD cross on your weekly right there, as you can see. And this one, though, is a little different because this one, unlike the S&P, does have like a weekly fair value gap that they can draw to for liquidity. And that's what you saw happen downward right there. There's a weekly fair value gap. I talked to you guys about weeks ago which way was it going to draw, and it drew down to that one first and then took off. And so it still has that as well. Now, when we look over here at the IWM, I mean, again, weekly chart, looks like it's trying to get that bullish MACD cross to get above that zero line. And when that happens, it's usually pretty powerful for this thing. You can see it went months being below that zero line. But, you know, if it can come up, like you saw that right there, I don't expect anything like that, by the way. But, you know, you come up to the right, you can see where we crossed over. That was like in January 2023 and maybe in, what was that, June right there, 2023. And that's when you started seeing those, you know, nice spike moves up before it sold off and stuff. Again, this is not fundamentals. I mean, this is a terrible environment. Their earnings are horrible, but this is just a technical thing. We're just getting this bounce, and you saw they bought it back up after it dropped 1.5% on Thursday. They bought it right back up on Friday, and so we'll see if that rotation continues into the stocks and things like that that are rate sensitive. That's what we just gotta find out. We know they're going to go into the Mag 7, but it's about how much, right? And then when you look at IWM right here on the weekly, I mean, it's trying to cross the 50 line for that RSI right there. And when that happens, you know, all of a sudden you got more bulls in charge, right? That's what you're looking at right there. More momentum moving up. And every single time you've seen one of those moves, this has always happened for it over the last year and a half. So just keep that in mind when looking at this. Now, what are we looking at to continue? If this rally is going to continue, it's got to be the dollar. You can see it had its biggest decline right there in I don't know, the last 2 or 3 years, I believe, when I looked at the chart. And so huge decline on Thursday, I believe that was. And if that continues to sell off, then that's going to be good for equities for sure, especially if you're looking at bonds and high beta stuff and everything like that. And, you know, we'll see if it comes down this trend line right here. But if that does happen, that is a good signal. You can see the MACD looks like it's basically rolling over stuff. The RSI is rolling over. Some momentum, even on the weekly, it looks terrible for the dollar, which is good when it comes to inflation and everything else. And so that's what we've kind of been waiting to see here. And then we move over to the 10-year. Now, remember, we have a 20-year bond auction, I believe Monday. I'm going to go through the economic data and stuff like that. And if that goes well, yields should drop again. If it goes badly, then yields are going to pop and you're going to see stocks sell off and stuff, okay? So just keep that in mind. Again, this is another one. It's like a hot mess. No momentum to it. It's broken down. I've showed you what happens when you have bearish divergence and stuff from the RSI on the 10-year yield last time. Then we look at the 30, it's the same thing. I mean, it looks like it's breaking down, no momentum to it. But again, let's just watch, see how the bond auctions go. I'm going to put this across here because you could see a bounce right there. That'd be a great level for it to bounce right there, but it's still a good ways from that. So we'll see how it goes. That's another almost 4% drop on the 30-year. Now, looking at NVIDIA, this is the big one. This is what really matters on Tuesday because this will drag so many stocks down or push so many stocks up when it comes to AI, right, with those earnings and stuff. And, you know, we look at this thing. Again, you still have, and not this is affecting NVIDIA at all. I don't think it's ever worked out as far as like bearish RSI divergence, but it still has it going on the 4-hour right there. Even on the weekly when I looked at it, it had bearish divergence. But I just want to see if this is eventually going to play out. I keep putting this up here, and we're going to see. I mean, this is Wyckoff's distribution model and stuff, and it's followed it almost completely. So some people are betting we go to 600. Maybe that's the top out before you finally start to sell off, or we end up having a bad earnings. And boom, it ends up going down. But if it has bad earnings, I mean, there's going to be so many stocks selling off. It's going to be insane because this the king of AI, right? But then again, you know, I think a lot of people are betting 600s in the cards. So let's just see. And it's been over a year since it's missed earnings. So then you got Tesla. You know, momentum starting to look good. You definitely want to see that MACD above the 0 line, but the RSI is looking good. This one just seems to be kind of wedging itself in. Dip buyers are coming in as of lately. Again, we're going to have a low volume week because it's a holiday week. It's a shorter week. Okay, some people won't even participate this week. They'll be out of town, gone. And so, you know, we'll see how this pushes up. But, you know, I don't see it dropping below that trend line right there for sure. I definitely see it coming down, finished, filling that gap if it does sell off before it gets its bounce up. But also, I mean, getting above like maybe 245, 250 will be a high-end target if we start seeing call volume flow in or some crazy news coming out. Because remember, they got their event at the end of the month when it comes to the Cybertruck and stuff. Now, AMD, this one right here, I'm looking for this trend line. That's all I want to see. I think it's 1.5% away or something to see if it does get rejected. You know, we'll see if the MACD and them start to finally roll over. This has been on fire lately. And so again, though, this is going to depend on NVIDIA. If NVIDIA skyrockets, AMD is going to come right behind it. All right, you pull up the moving averages, everything's looking good and everything. This is now not a supply zone, but a demand zone. So if it does come back there, you definitely should see a bounce and stuff. But again, this is just a whole another one that's going to depend. There's that trend line I was talking about. That would be the third touch on NVIDIA for sure. And that's all eyes are on. I don't even think people care about economic news at all this week. They just care about that one earnings call. Now, Microsoft finally started coming down a little bit. You've been waiting on this. I mean, this thing right here has just been on a tear. I don't know how many green days that is, just out of the last 14, but it's amazing. But really what you're looking at, to come down to the previous all-time high and bounce and turn that into support. That's what you're really looking at. But like we talked about, this one, just because of who it is definitely getting stretched out from those moving averages. So I'm expecting it to come down. I don't have to touch the moving averages, but just come down to at least like an 8% above instead of like 12 or 13% above the moving averages. Because remember, they're like rubber bands. Now, Amazon's interesting. It is really having trouble with this level I talked about. When it was the double top last time, now you're looking at where it's almost like a triple top, right? And so it's just having a lot of trouble getting through that like 145 area right there. And so, you know, if it can get through that, though, for sure it's going to go upwards of 155 pretty quickly until you see all that resistance, which looks like around like 160 right there. And so that's what I'm looking at Amazon to see if it can get through there, or is that going to be a rejection? And this one, unlike Microsoft, you can see it hadn't pulled away from its moving averages, right? And so again, you can probably, I need to put a trend line there from the bottom. It's had 3 touches. So, you know, this one's still strong. I don't see some big sell-off coming as some crazy news happens or whatever. Now, when it comes to earnings, short week, you can see you're going to have Zoom right there on Monday. That's really the only ones I look at. Maybe Trip.com, see how we're traveling and stuff. Then Tuesday, a lot more retailers. Kohl's, Lowe's, Best Buy. What else we got? Dick's Sporting Goods, American Eagle. And then Tuesday night after the bell, NVDA, and that's the only one that matters, to be honest with you. And it's just surprising they're reporting Thanksgiving week. So we'll see how this one goes. But then you'll have Nordstrom's, other retailers. Then you get John Deere, which I mean, I assume there's going to be a slowdown on this. But then again, maybe because of the infrastructure bill, you'll see something happening there. Now, there it is on Monday, that 20-year bond auction, right? And let's see how the volume is. Or do they have to offer higher yields to get people to start biting on this stuff? A lot of people are going to be watching that. Then when you come to Tuesday, you'll have the Chicago Fed National Activity Index. After that, FOMC minutes. I mean, maybe that's going to do something or whatever. And then Wednesday, you're going to have your jobs data coming out once again. We'll see if it's soft, still, or does it actually pick up or not. Remember, the Fed wants this to actually keep moving up. Then you have Michigan consumer sentiment, a lot of oil data coming out. You'll have some bond auctions, but they're very short duration bond auctions, so those should be fine. Then we'll have Thursday closed, and then Friday back open, where you'll have S&P Global Composite PMI flash, global manufacturing, and services. After the bell opens, it's supposed to be weekly options expiration, so that can definitely affect the market. So again, holiday weeks are tricky or whatever it is, but the big thing to watch for is if there is weakness on Monday and Tuesday, look and see if it gets bought up. Right, that's going to be the big thing. So that's what you saw when IWM sold off Thursday. People were like, oh, it's the end of the world, and then just came roaring back up 1.3% before the market even opened up, for crying out loud. It held pretty dang good. So that's just what we're going to see. So I'm watching IWM, the equal weighted ETFs, like I've been showing you. I'm watching utilities, all those rate sensitive sectors and stuff like that. And then kind of going from there. I'm not in the Mag 7. We'll see how they're playing out or whatever. But I've showed you multiple times now where XLK, that's the big tech, and the Mag 7 have been way down on the list of all the sectors that are performing well. So that shows us, is the breadth truly continuing to expand? And if you want to get a set of all-time new high, that's what you're going to have, right? That's why we hadn't reached it yet, because the Mag 7 can carry you so far, but you need other stocks to participate, which means big money, not us, has to go into those other stocks, right? And you're seeing, I think I did a member video showing this, where you're seeing a lot of other sectors and stocks break out like that. And so it got kind of the momentum behind them. We'll see if it continues. So anyway, I hope you guys have a good night. Please hit that like and subscribe button, and I'll end up seeing you tomorrow.